S&P 500 daily forecast May 2nd, fxempire.com. The S&P 500 fell during the session on Wednesday, as you can see, breaking below the hammer on Tuesday, making that a hanging man actually, which is a very bearish sign. The biggest problem, though, is that as you look at this market, you can make a lot of support and resistance lines. Most of them are minor, granted, but in reality, we see a ton of support going all the way down to 1540, where we see massive support. With that being the case, there are just far too many areas where we could bounce from, and as a result, we do not like selling this market. We simply are going to wait for it to pull back and buy from that point that shows the most support. The Federal Reserve continues to talk about, and this was released during the session, uh, possibility of tightening up monetary policy, in other words, less buying of bonds, or, and this one was a little bit different when they announced it, the possibility of expanding it. They would just adjust it as what the economy needs. That being the case, there is the possibility of a bullish interest rate outlook, and if that's the case, then that could, in theory at least, hurt stocks. And that might have been part of what the sell off or the profit taking was during the session. Nonetheless, we can see plenty of areas that support could come into the marketplace, and as a result, we are willing to buy the supportive candles. We are not willing to sell.